Lockheed Martin Corporation, ticker symbol LMT, is currently trading at $605.86 a share. It has had a very good year today, as it is up almost 33% from the start of 2024. This stock is one of the main constituents of the Schwab US Dividend Equities ETF, otherwise known as SCHD. It is one of the top 10 holdings, as you can see right here. So what we're going to be doing today is looking at my automated stock valuation spreadsheet and seeing if Lockheed Martin is a buy or sell using the discounted free cash flow model, comparable company model, dividend discount model, and of course the Ben Graham formula for intrinsic value. So as I said, this stock over the last year has performed very, very well. If we were to compare it to the S&P 500 over that similar time, you can see it is blowing out the market, 33% compared to 20%, and over the last year as well, up almost 50% compared to the market's 33%. Now, if we do take this out a little bit further, you can see that it has not beat the market over the last 5 years. It has only beat it over the last year and a half. So let's have a look at my automated stock valuation spreadsheet. Firstly, what we will do is put in the ticker LMT, and this will load all the latest company financial data. If you're interested, check out my Patreon. So as I said, this currently has a price of $605 a share, market cap of 144 billion, pretty low PE ratio of under 22, and with a market average pretty high at the minute, just crossed over 30 there, 30.07, so that is lower than the market average. Earnings per share, $27.58, and a beta of about 0.5, meaning it's a lot less volatile than the markets. Analysts saying currently it is not a buy, interestingly enough, with a target price of $547 a share. Now, this is one of the favorites for dividend investors, a massive dividend yield of 2.16%. Obviously, this has actually decreased recently with the share price increasing, but dividend of share of $13.09 a share. They pay out around about 3.1 billion, and it is very, very safe, around about 46 and 44 payout ratios in regards to profit and free cash flow. So if we look at the dividend max here and do Lockheed Martin, not LMT, what this will do is it will tell us the ex-dividend date to see when the time is you should buy it. So if you buy it before the 2nd of December, 2024, you will get paid later that month. So that is excellent to see. So let's have a look at the revenue numbers. Revenue is up all-time highs, 70.07 billion. They've had steadily increasing revenues over the last, well, as you can see here, pretty consistently, so from 2015, as they have consistently beat revenue and increased the company's revenues. Net income, similar-ish story, slightly down from 2023, its all-time high of 6.64 billion, but overall the trend is upwards for Lockheed Martin. Free cash flow, very similar to what we've just seen in net income, 6.59 billion, down from its all-time highs in 2021, but once again generally trending upwards and have beat the last 2 years. Excellent. Shares outstanding, what are they doing? Well, they are rewarding shareholders. You can see they are consistently buying back shares, and they have done so back from 2009, which is when this data is created. You can see here very well they are rewarding shareholders with that buyback program. Assets versus liabilities, pretty consistent. You can see it's been this way since 2010 pretty much. Right, let's have a look at my automated, this is the discounted free cash flow model. What this is a way of valuing companies based on their future free cash flows and discounted to today's value. So based on averages here, we actually have a calculated stock price of $760 a share. Now let's have a deeper look at these numbers and see if we still agree with them. Revenue estimates, we're actually expecting quite low growth of 1.6% if we take on the averages. If we have a look at analysts, they are saying that revenue numbers are around about, here they are, current year 71.1 billion and 74 in 2025, and they're also expecting about 4 years of growth. So actually we're a little bit low on revenue estimates. We'll go 3%. We'll go 2.7%. So that brings a little more in. $795 now. We'll have a look at net income margins. Pretty happy with this number. It looks like it's a fair estimate. And free cash flow. It looks like the free cash flow number should be actually a little bit higher. We'll bring this up to about 95%. $850 a share on discounted free cash flow model. That is massive to see. I'll just quickly look at the dividend discount model. Sometimes it doesn't really show it as expected. The weighted average cost of capital is 6%, and the average growth is 7.4. So the previous one was 5. Yeah, so that gives it as $1,000 a share. Interesting to see the dividend discount model. I am using this. You can see kind of the growth, but I don't think $1,000 is a realistic price. But we'll see what Ben Graham has to say with the Ben Graham formula for intrinsic value. This is looking at earnings per share, PE of no growth companies, AAA bond and corporate bond yield. Bond yield currently is still, 4.68. And analyst growth, I think we saw it was about 5%, wasn't it? So I don't think Ben Graham is going to say it's a buy. Massively disagreeing with the discounted free cash flow model and the dividend discount model. Yeah, about 4.47%. He is currently putting it at around about $300 a share. So Ben Graham does not care for the stock. And finally, let's have a look at the comparable company model. This is a way of valuing companies, looking at similar companies of similar industries and sizes. And then we'll look at revenue growth rate, EBITDA, net income, profit margins, price to sales, price to book PEG, EV to revenue, EV to EBITDA, and PE. And then this will give us a value based on these companies. So ones that immediately jump out at me, RTX, formerly known as Raytheon. This will load all the company's financial data and we can have a deeper look. NOC, which is Northrop Grumman Corp. I think I pronounced that correctly. And GD, which is, of course, General Dynamics Corp. These are all defense contractors or in the aerospace. And let's see what it says. So in terms of revenue, Lockheed is just below RDX. Actually, sorry, enterprise value. Second largest company. These are all pretty similar. 100 billion to 200 billion, and Lockheed is in the middle. Revenue actually second highest, just behind Raytheon, RDX. Growth rate, one of the middle of the pack really. RDX is the highest with these two after that. EBITDA highest, 10 billion, and most profitable actually. Look at that, 6.7 billion, 10% profit margins compared to the 3, 5, and 8% of the other three companies. Price to sales. We can see here the price to sales of the S&P 500 currently is about 3, and Lockheed is below that with 1.96. Price to book, similar story, 5, very high actually, 22 compared to RTX and I was looking at RTX there. PEG highest, surprisingly. You can see RTX and Northrop is actually lower than 1. Now this is Peter Lynch's price to earnings growth. Lower is better, so that's quite interesting to see. EV to revenue, all very, very close. EV to EBITDA, we can see here 15, and of course PE lowest as well. Actually lowest of all three of them. We want to see lower numbers is better. So based on these implied value, based on these three comparable companies, $790 a share. Very interesting. Surprisingly close actually to our a bit less bullish than this. Calculated stock price of $840. A dividend discount model surprisingly 1,000. So actually all three are on the upside. Comparable company one is possibly my favorite. I do like looking at this the most, as we can get sort of a better understanding. If I was to compare just out of interest between RTX, Corp, NOC, and finally GD, General Dynamics, and sort of look over the last 5 years, all pretty close. Lockheed second behind General Dynamics, but over the last year, this is where you can see Lockheed and RTX are on the up and up. Year to date as well, quite similar story. So Lockheed and RTX looking very, very good. I think I'll probably do a video on RTX if anyone is interested. Right guys, thanks for watching. Please give a like on the video if you enjoyed it. Subscribe if you're not already. Check my Patreon if you're interested, and I'll catch you guys next time.